Hello and welcome to another Smaulgld live stream. It is October 6th, 2019. And welcome to Solid Gold Sunday with Smaulgld. Tonight's topic, gold open interest at all-time high. Got some very interesting data on gold tonight. As I mentioned, gold open interest on the Comex at an all-time high. We are close to all-time highs on the amount of gold flowing into custodial arrangements and ETFs. And so let's get into what is going on in the gold market. Now, right now, the gold price is at $1,500, which is good. That's a good thing. The gold price has held above $1,500. It's dipped a little bit, just a little bit in the last couple of days. But for the most part, for the last month, the gold price has held above $1,500, which was something that we talked about, that if it holds that price, and it has held that price now, that it probably will start to make a move towards 1600 absent some type of smackdown. But let's take a look at the charts now on what we have for tonight on gold. And I think we're going to start out with some price charts. We're going to look at the gold silver ratio. Let's look at the last year. So here is the last year's chart for gold, and it's very nice looking. You're seeing you're starting, last October price was under $1,200, and then it got to $1,200. It really didn't start moving until January, and you can see during the spring it was pretty much base building in the 1250, 1275 range, and there was difficulty in getting past that 1375, 1350 range for the longest time for the last few years, but it pretty much made a straight line from about 1340 over to 1400 and hasn't dipped back to that 1375 level. Got a little bit below 1400, but it pretty much built a base in the $1,400 range. And then you can see it shot up again. It made another spike up to the $1,500 range. And it looks like it's hung out. It did drop last week below 1500, but the average since August has been well over $1,500. Let's just take a look at, before we move on to the data that we have tonight, which is very interesting, is the 10-year chart. There's your store of value story. Now, in retrospect, this spike there was probably, it was warranted, the spike, but the thing is, it was a bit of parabolic rise there, because that rise only shows from 2010, and it's showing from $1,000. But that really rose from $200 if you go back another 7-8 years before then. So it did need to consolidate a bit, and that's essentially what it did. So absent that big spike, and then you can see there's a dive from in 2012 to 2014. And then it kind of drifted lower all the way to 2016. But if you take that little stretch out there, let's say you just start at 2011 and you eliminate, 2011 to 2017, 2016, then you have a nice increase from 2011, a very orderly increase, but that's not what the chart is showing. I mean, you can't just eliminate 5-6 years. But, gold's been around 5,000 years or more as a store of value. So if you smooth all this out, and in fact, I did a chart just a couple of years ago that showed if you bought $100 worth of gold, even during the last 10 years, at the average price, you'll be still way ahead of the game, way ahead of the dollar. So yes, the gold took a bit of a beating, but it looks like it's back on track now. That's not what we're here to talk about. We're here to talk about this open interest and what's going on. Now, remember, gold is doing what we would call well against the dollar and against the Dow. But the Dow and the dollar are clearly, they're the kings of the whole fiat system. Obviously, the dollar is the world reserve currency. It's got all the weight and power of the Fed behind it, and also the weight and power of the ECB and the Bank of England and the Bank of Japan, because they're all tied into it. And it even has China, in a sense, kind of piggybacking off of it, because China runs on dollars, and China needs dollars, and China borrows prodigious amounts in dollars, and so does the rest of the world. You heard about the euro market, euro dollar market. There's plenty of demand for dollars. So that's the main reason that gold hasn't, quote, skyrocketed versus the dollar as it has, and we're going to see in a few minutes, against other currencies in the world, because the dollar is the centerpiece of the fiat system. Same with the U.S. stock market. I mean, they kind of go part and parcel, hand in hand. Dollar-denominated assets are what people want to own, so they buy into the Dow Jones, the S&P, the NASDAQ. And you can see gold is putting up a run against the Dow Jones, but the Dow Jones is holding out, and just like the dollar is, gold is fighting, it's winning against the dollar. It's almost winning against the Dow, but remember, the entire weight of the U.S. Treasury, the Federal Reserve, the other foreign central banks are pushing into the dollar, pushing into the Dow Jones. Now, we do have central banks now. If you think about it, like the Swiss National Bank buys U.S. stocks. Now, they don't buy any gold. We do have some foreign central banks buying gold, but not in the same dollar amounts, this massive amounts that you're seeing of foreign central banks pushing money into their own stock markets, into corporate bonds, equities, QE. Remember, when they do QE around the world, and when the Fed does QE, they're not buying gold. So it's amazing that gold has managed to actually outperform these investment vehicles, the dollar, the treasuries, the Dow Jones, and so on, when it's actually not being actively supported by the whole system. So the system is being propped up versus, it's not being propped up versus gold, but it's giving gold a hard time. But let's take a look now. This is the Dow Jones versus spot index. You can see all these charts will be on Smaulgld later tonight or tomorrow morning. But let's take a look at gold and foreign currencies, and then we're going to take a look at the amount of money that's pouring into gold ETFs and into the amount of contracts being sold on Comex. Now, last night we were talking about the amount of silver, maybe 300 million ounces, I think we talked about last night, are in the Comex vaults, and that's where the bulk of the trading is, $5 billion worth. So the gold market is much bigger, but the amount of gold at Comex relative what's traded is minuscule. We'll see that in a minute. Let's just look at gold versus the Argentine peso. See, this is where you really start to see gold shine, no pun intended, but gold is there's no contest once you start dealing with currencies that have there's no reason to own them other than government of Argentina says this is our national currency, and people in Argentina realize that it's basically thin air, and they even rather have dollars. Now, dollars are, quote, thin air currencies too, but they're what the whole system runs on, and there's this understanding that that's what every country is going to work off of. So that's why the dollar has that value, and everyone accepts dollars, everyone uses dollars, and they're kind of forced to use dollars. So it has its value. But Argentine peso doesn't benefit from any of that, and you can just see gold just takes off against the peso. Australian dollar, it's a decent currency, it's a decent country, it's a decent place. I mean, it's no worse than some of the other central banks. They got low interest rates, but still, no contest against gold. Right now, against the Australian dollar, I mean, it's going to cost you 2,225 Aussie dollars to get yourself an ounce of gold. It would only cost you about 1,650 a couple of years ago. And this is not, the Australian dollar is not a bad currency. Same with the Canadian dollars. Take a look there. I think it cost you 2,000. Yeah, 2,000 Canadian dollars. These are all-time highs now. These are now ahead of what we had a few years back. So far, gold has not managed to hit its all-time high against the dollar, which was in 2011 when it hit $1,911. But it's blown through all-time highs versus all other currencies now, as you can see. Same with the euro. I mean, the euro, it was designed to be somewhat the alternative dollar for the rest of the world, but we're pretty much near an all-time high there. You had 1,400 euros to buy an ounce of gold. British pound, same thing. Used to be about 900 pounds to get an ounce of gold. Now it'll cost you about 12 and a quarter to get an ounce of gold. Very near all-time highs again. Chinese yuan, not doing very well. You can see there, cost you about $8,200 RMB to get an ounce of gold. Now it costs you 10,750. And India, I mean, you can understand why Indians buy gold. Check this out. I go back on this chart. All the way to 2000 used to cost you about, I don't know, 15,000 rupee. Well, it almost cost 10 times that amount. It cost you 107,000 rupee now to get an ounce of gold. In just the last few years, 2011, which was the peak year for gold in dollars, it was at about 85,000, and now it's at 107. So gold definitely holding up, blowing past all other fiat currencies and making a run at the record in dollars. Now let's look at this. First, we're gonna take. Let's take a look at the Comex, because that's what the title is, and that's what people are here to hear about. But I do want to go on and look at the retail demand, the ETF demand, and break all that down. So let's look at the Comex. Now, the open interest is massive, and there's the most contracts that we've had ever. And here's a chart that shows that going back to 1970. Now, the open interest basically is just the total number of outstanding contracts that are held by buyers and sellers. And this is the measure of flow into the futures market. This is, people are interested in the gold market. There's no two ways about it. And it hasn't been this high since 2011. When we had, as you can see at the top price, you see the blue line, that's the high price, the $1,911. And that's when the open interest was at the highest. That's when people were trading a lot of gold, very interested in. You can also see the peak, the market was smaller back in 1980. You could see that peak there as well. But right now we are at a record open interest in gold. And normally the way volume works with anything, volume usually precedes a movement in price. Now, this is an investment advice. It could precede a big crash in price. Probably what's happening right now, the reason the open interest is so high, is there's probably a certain number of speculators that are thinking everything they see is flashing a signal. Buy gold. And then there's a group of people who say these people are out of their minds. You shouldn't be buying gold. So they take the other side of that trade. I don't have that chart tonight, but that's pretty much what it looks like. You got a lot on the top and a lot on the bottom. Someone's going to win. And generally, I think whoever's going to win on this, there's going to be a big move, because you're going to have large positions. You're going to have to either roll over or close out. And it's going to head in one way or another. My guess, it's going to break to the upside. I mean, there's just too much going on. And remember, I always say gold goes ahead of silver. Negative interest rates, the Fed changing course this year. They were supposed to raise rates this year. Now they've already cut them twice. You've got just political uncertainty with China, with the United States, with impeachment. These are all passing things, but still, they're out there. The main trend that's not changing is the amount of debt in the system, the amount of negative interest rate debt, the push by central banks to go negative, the open endorsement of modern monetary policy and handed out money and helicopter money, and the Fed's open discussions about buying more assets, other countries' central banks buying assets, Japan. It just really, if gold is still relevant as the anti-fiat dollar, anti-fiat currency, anti-fiat system, anti-paper, anti-digital markets, then it looks like it's set to go higher. Could be wrong, but that's what this tells me, is that there's a lot of interest. Now, it could go the other way. It can get slammed down. They're trying to keep a lid on it. Maybe they'll be successful. But that's your gold open interest. And here's a shorter term chart. You could see it's ahead of 2011 as well. It's peaked above. This is just 2009 to 2011. The amount of open interest, again, record amounts. Now, Some of you think, what about silver? What about silver? What about silver? Well, here you can see silver. There's a big interest in silver. It's just not at the same peak level yet like you had in 2011. You could see the peak volume in 2011 was massive. But look at 1980. Look at that open interest. We're not going to get there, I don't think. But the open interest is also, it's close to, it's at a recent record, but it's not at the record levels of 1980. I mean, look at that, when they had all that wild trading thing going from like $4 to $50. That's the Hunts brothers era. But volume was very high in 2011. We're not at that volume yet. But silver is following gold. It's not there yet, but I would think if gold continues to trade and to trade higher, then silver will probably follow. Now, what about the gold that's actually in the Comex? Well, last night we talked about the 300 million ounces of silver at the Comex that they trade around. This is nuts. Look at the amount of gold that they trade around at the Comex. Less than 10 million ounces. You're talking about, I don't know, what is this? This is 270 tons. I mean, this is nothing. There's not even. Hold on. What is it says it's 897 million, right? So that's so it's 897 million. Let me just do a quick calculation on that for you. Yeah, 278 tons is what that is, which is, I mean, it's less than the Bank of England has, and the Bank of England doesn't have that much. They have 310 tons. That's what they trade around. What's even more amazing about the amount of gold, or the limited amount of gold that they have, that really sets the price they're trading around this gold, is the amount of gold that's actually registered to sell. Now, the gold that I'm showing you, the big green part, the lighter green, is the eligible gold. That means it's in the good delivery bars, the 9995 gold 100-ounce bars, but it hasn't been registered yet. Look how little is registered. It doesn't bother me that much because the eligible gold can be registered. But at one point, just earlier this year, or really at the end of last year, they had like 150,000 ounces registered. That's it. This year, it was like at 200,000. Right now, it's moved up to 1.15 million recently. And I think that's because now a lot of people are saying that they're expecting the price to rise. They want to get their ducks in order. If they want to sell it, they want to move it up, and they want to put it into the registered category. But let's take a look at deliveries, because people talk about someone's going to stand for delivery. Now, these people they're there to trade the price of gold. I mean, the amount of delivery is less important. Here's a chart that shows how much gold is actually delivered. And last year they delivered 3.5 million ounces. It's a decent amount, but it's nothing. It's like 100 some odd tons, a little less than that. I mean, they do deliver gold, but the amount of gold that trades on the contract that never sees any delivery is multiple times that. The other interesting thing about the Comex and the gold warehouses is it's like 70% of it is in the HSBC Comex vault. I mean, they have 5.8 of the 8.9 million ounces. That's a pretty big chunk of it. And remember, HSBC is also the custodian for GLD. So they are pretty big on the the gold there. And then the other big player, which isn't that big, remember JP Morgan has about 153 million ounces of silver in their warehouse at Comex. They've only got 1.3 million ounces of gold. Remember, you hear a lot of these stories that JP Morgan is stacking silver. They're not. This is silver that belongs to clients. It's not in their name, maybe in street name, but this nonsense about them buying Silver Eagles and Canadian Maple Leafs, that's all pure speculation, pure fantasy. It's never influenced the price. It's not going to influence the price. They're going to let it ride or whatever nonsense you hear. I don't know. If you want to pay attention to that kind of stuff, I ask you to ask questions. Don't just take for granted someone repeats something, everyone else repeats it, that somehow it's true. JP Morgan bought Silver Eagles and they have a stack of silver. They don't. And you could say, how you can't prove that they don't? Nope, I can't. But they can prove that they can, and the burden of proof is on the people making up the story that somehow JP Morgan has all this silver. Anyway, this is the JP Morgan Chase Depository. They've got 1.2 million, 1.3 million ounces of gold in there. And between HSBC and JP Morgan, they control the bulk of the Comex gold, but as I mentioned, it's not really that much gold considering the amount of trading that they do around that amount of gold. Now, where there's more gold, and that's what we're going to talk about now, is in the ETFs. Now, the ETFs, as we cover this all the time, it's a chart I like to bring up here. We're close to now all-time highs in gold based on the inflows we've had. Look to the far right of the chart. There's about 83 million ounces of gold. Well, what did we say? There's 8.9 million ounces of gold in the Comex warehouses. We're almost 10 times the amount of gold in gold ETFs as there is in the Comex. And yet, it's the tail wagging the dog, because the Comex trading is what moves the market, not how much gold goes into the ETFs. This kind of tracks the price, more or less. But it is amazing that there's less than 10 million ounces and only like 1 million registered, and people are trading around that, and that's what's setting the price. Now, there's a lot of interest in it, but again, if they were all interested in gold and they wanted to, quote, stand for delivery, wouldn't be there. But they don't want to stand for delivery. That's not the purpose of them trading. They're trading price. Same thing with people who buy ETFs. They're looking to sell their gold and buy their gold with a mouse click. They're not looking... They may think they have insurance, and they may think that this will protect them and so on, but ETFs don't trade when the market closes. They can't trade. And you can't get your gold out. And most of them don't even let you get the gold out unless you go through some big procedure, and you have to have a certain amount, and it's usually a very large amount in order to do it. Even the Sprott one, it's not really the right... I mean, if you want to have gold delivered, buying the Sprott ETF is still a process. I believe you have to wait to the end of the month to get it. I mean, by then everything could be different. So ETFs, they're convenient. They can trade price, but they're not really a way of buying and storing gold. Now, buying and storing gold, you can do that through brokers. You can do it through gold money, bullion vault. I'm not promoting these guys. I'm just saying these are services that are available. You can store with Perth Mint. You can store with, I think, Gold Core, Gold Broker. A lot of places will have, Schiff will have it. They'll have places where you can, they'll store the gold for you, it'll be allocated in your name, and that's different than buying a gold ETF. All right, but you can see that is moving up, and that again is an indication of interest in gold. And the other thing I like to look at is this is the total gold holding, and I mentioned Gold Money, and I mentioned Bullion Vault, and I mentioned Perth Mint, and the Canadian Mint, and there's a bunch of others that are not ETFs, but they'll store your gold Anthem. And this chart reflects not the 81 million ounces of gold in ETFs. This brings you over a billion. This is 101 million ounces. And again, almost at all-time highs. And the last all-time high wasn't in 2011. It actually, remember, when the price hit the all-time high in 2011, it didn't crash right away. It crashed like at the end of 2012 when they started QE3. So a lot of money was going into gold even after it hit its all-time high, because it looked like, hey, if they're going to do QE3, this is it. This is game over. I mean, they're just going to print us into massive hyperinflation. Then you could see when it didn't happen, price of gold fell, and the amount of gold interest, you could see it dropped. Picked up again in 2016. You can see it goes right back up with Brexit. And we're pretty much been hanging on since then at higher levels in volume of gold being stored. And then it shot up in the last, 2 months, maybe 3 months. So there we are. All right. What else do we have here? Something happened to my machine. Oh, there it is. Okay. All right. The next thing we want to look at now is this is the 20-year chart. This just shows the inflows of gold into these types of arrangements, which I think is pretty cool. You can see that the ETFs didn't take off till about 2006, and you can see a big increase. This is a new way of holding gold. I mean, in the late 70s, early 80s, during a period of time when people were concerned about inflation in the United States, the real way people bought gold back then was there was no gold eagles. There was no U.S. Mint selling gold at the time. People bought Engelhard silver bars from a local coin shop. They lined up there. They bought Krugerrands. There was no American gold. They could have purchased pre-33 gold, but there were no American silver eagles. There were no silver pumper channels. There were no gold eagles. There were no gold buffaloes. The gold that you bought was either some kind of bar or a Krugerrand was the number one most popular, and that was from South Africa, and they were the big gold producer at the time. This way of buying gold to ETFs started around 2006. It did drive a lot of money into the market, but of course, who knows what they do with that gold, if it's lent out, hypothecated, made into more shares, who knows. But you can see it has really taken off. And it's made it, they say it makes it more easy, makes it easier for people to, quote, have exposure to the price of gold, not necessarily buy gold. And let's take a look at the breakdown of where the gold is going. This is the physical market. Well, I'm sorry. We're going to look at the mint numbers in a second. I shouldn't have called this the physical market. This is not the Comex. There's Comex on here too, but this is what people put money in into ETFs, and then presumably there's a physical purchase associated on behalf of the ETF buyer. So here you can see big increase in GLD just in the last 4 weeks, up almost 5%. Same with iShares, IAU, Deutsche Bank's ETF, really seeing a big increase over the last 3 months. It's now just up 3% in the last 4 weeks. Central Fund of Canada, it's pretty much flat. What else is on here? Bullion Vault, pretty much flat. Gold Money, flat. So it's interesting, the Gold Money and the Bullion Vault, they're not ETFs. That's you send them money and they will store gold and they'll ship it to you too. And you can sell it as at a mouse click as well. But what this is showing is, look at the increase at the top of registered Comex gold. That's not new gold coming in. That's just the old gold that was already there, and they just decided to register. But there's a big increase in registered gold. But total gold has actually gone down, so they're not really seeing a lot of gold pouring into the Comex warehouse. All we're seeing now is them changing the gold from eligible to registered. The amount in the last 4 weeks, total that increased, only 0.13%. Let's round out this chart at the bottom, because this is only half the chart that Nick Laird has prepared here. And this one you can see on here, Canadian Mint, Van Eck, ETF, India Fund, what else? Nothing else that I recognize that anyone else would recognize. But anyway, 2.43% more gold flowing into all of these in the aggregate in just the last 4 weeks. And of course, you're over 1 billion ounces of gold, which is a lot of gold that's in these types of things when, 15 years ago, didn't exist at all. And here's just one more chart that shows this is all those entities wrapped up, showing how much gold is held and the value of that gold held. Again, these charts will be on Smaulgld tonight or sometime tomorrow morning. And let's see. This chart shows the weekly change. This is a good one because you can see pretty much since June, almost every week, big amounts of gold flowing in. We had a little bit of a pullback in September. It's the red line at the bottom, but you could see the inexorable climb of the amount of gold moving into these entities. And also, you can see how it tracks the price pretty much. Not exactly, but as the gold price goes up, more gold flows in. All right, let's take a, finally, before we get to your comments, let's take a look at the retail demand. Now, the U.S. demand, I didn't even bother to make my own chart tonight. I took Nick's. But this is nasty. The U.S. Mint sales for gold are horrendous. In fact, I was just looking at them. add them up here. But I've added them up. And to date, only 91,500 1-ounce American Gold Eagles have been sold. Altogether, if you take into account the 1/10 ounce, the 1/2 ounce, the 1/4 ounce, and the 1 ounce, so 10th, quarter, half, and 1 ounce coins, American Gold Eagle, 129,000 ounces total. And of the American Gold Buffaloes so far this year, only 50,500. That'll be the lowest ever if it continues. I mean, 99,000 was the lowest prior. They normally used to sell 200,000 of those coins for the last 10, 15 years. Wasn't a big seller, but 50,000, it's almost them not worth bothering. Now, this is very odd because let's just compare the Perth Mint, which is a much smaller mint. Keep that chart in mind. I don't have the split screen capability right now, but Perth Mint is selling, I mean, the last month in September was good. I mean, they sold 47,000 ounces of gold. Not bad for a small regional mint in the Western Australia. But look at the U.S. Mint. 6,500. That's total. That includes the 1 ounce, 1/2 ounce, quarter ounce, 10th ounce, and the Buffalo. I mean, the 6,500 ounces. It's hardly any. That's the whole country. But then look at the Perth Mint. All right, now let's look at, just pick a random country, South Korea. Boom, according to Refinitiv Metals, investment demand for gold has surged 40% so far this year. Silver doubled. So this is clearly the United States. Now, remember, what I think is happening is Americans aren't buying the physical gold. They're dumping it into those ETFs because that's showing a big increase, but you're not seeing it on the gold. And maybe they're buying cryptos or who knows. But India now was up big all year till June, and then July and August and probably September were down. But that's because the price went up. And there was a discount on gold. It's, according to Refinitiv Metals, they're saying there's still a discount, but it is narrowing. And I think the Indians aren't going to stay away for long. If they think that the price, they're not going to chase it. But if they think this is the new normal, that the price is $1,500, that's what they're going to have to pay. But they do hold off. They take a wait, see, wait, look. What's going to happen? And China's gold imports are also increasing. So central banks adding gold, Russia, China, Kazakhstan, retail gold up, gold ETF sales up, open interest at record levels. The only place you're not seeing it is in the U.S. Mint numbers. So it's pretty interesting that you would think the, quote, smart money, the institutions, are all over gold, and the Comex all over gold on the ETFs. Central banks all over it. But the retail, Perth Mint, which sells a lot to China, I'd imagine. At U.S. Mint, though, record low amounts of gold being sold pretty much. I mean, 6,500 ounces last month of all products that they sell. So, by the way, if you're interested in buying gold or silver, again, not investment advice, Smaulgld does have those affiliate links. And it does help out the site if you decide to buy gold or silver at Money Metals Exchange, Gold Eagle Coin, SD Bullion. The links are below this BitChute, below this YouTube. They're on the Smaulgld website. So using the affiliate links does help out Smaulgld. They do get a small commission on those. You can help Smaulgld out directly by purchasing a mug or sending a check or items of value or cash to Smaulgld LLC, P.O. Box 714, Dover, New Hampshire 03820, or sending Bitcoin or Litecoin, or becoming a Smaulgld patron. I haven't got that many this month. We got a good month in September for the first time. We got some patrons. We're over $100 a month now. Hooray. And Subscribestar, we're up to 5 Subscribestar members. I'll probably be able to get the money out of there now. You need to keep 5 Subscribestar members in order to collect your money in $150 increments. So I think thank you for those people who have joined Subscribestar and Patreon, and those people who do support the channel. So thank you very much. And let's see what those Smaulgld mug stackers and game changes are saying in the comments. Fiona is here. Precious Metals says hello. Precious Metals update. Tom Manley, haven't seen you in a while. He says good evening. Canna King. All right, because extreme gold-silver ratio, would anyone be buying metals, anything else but silver? Canna King, I'm not going to go through it, but this idea that the gold-silver ratio is out of whack, nonsense. Gold has a monetary component that doesn't even come close. Silver doesn't even come close to matching. The only way silver goes higher is if gold goes higher. Otherwise, you're counting on yoga pants to drive silver higher. Silver is no longer a monetary metal at all. It is not used as a monetary metal. It has a monetary history. It's got a dormant monetary component that might come alive in a barter situation, but no one other than people who watch silver pumper channels buys silver as an investment, buys silver in order to transact with it. It doesn't happen. That's why silver is down. Last night I talked about this. It's the post-1974 post-monetary metal era, meaning in the 60s, silver was taken out of the coins in all Western countries, all Eastern countries, no longer used as a medium of exchange. The silver certificates were canceled in 1968. There is no silver held anywhere at any central bank as a monetary metal. Gold, on the other hand, was removed from the monetary system in 1971, but it never left. People don't transact in it, but people still hold on to gold, store gold, much larger numbers, and central banks hold about 20-25% of the world's gold, and they count it as part of the reserves. Basel III allows gold to be held as a reserve asset and counted as a tier 1 asset. Point being, silver is not money. Gold is hanging on as a monetary asset, but it's not a medium of exchange. It's not a unit of account. Can be, but it isn't used as such. So the reason the gold-silver ratio has, forget the historic ratio, times were different then. Forget Roman soldiers and handed in togas and whatever they tell you. A day's pay, all nonsense, totally irrelevant today. What's relevant since 1974, that's when, first of all, gold was fixed priced from 1934 to 1974 by an act of Congress. Then they allowed people to buy gold straight up. You weren't allowed to buy it from 1933 to 1974 in the United States. Then they introduced the futures markets. Then gold and silver were finally on an apples to apples basis, meaning one was gold and one was silver, and neither of them were coins. Neither of them had any official tie to the monetary system. So since 1974, the gold-silver ratio hasn't been anywhere near, except once in 1980, 16-1, where it was at 16-1 for about 10 seconds. And ever since then, it's been well over 50-1 for a reason. Gold has a monetary component and relative rarity, and it comes out of the ground at 9-1. These are all silver pumper fairy tales. It doesn't matter, the relative rarity. Platinum is 10 times rarer than gold, and gold is more expensive. But platinum isn't money, and silver isn't money either. And by the way, something doesn't need to be money to be valuable. Anyway, so this is almost, people act like, why would anyone buy silver? They've been saying you got to buy silver. It's unsustainable, the gold-silver ratio. I showed this last night. For the last 7 years. And it just goes higher. So silver can go higher, but only if there's two ways silver can go higher. Somehow there's some commodity reason why everyone has to have silver, just like with palladium happened recently, or rhodium. Those things do happen. Don't expect that to happen in silver right now. Or, as we've seen the past two times where silver spiked to 50, both times in 1980 and 2011, is when gold was also taken off. Silver has that dormant monetary component. It's a small market. People do start to look at silver and they say, that's almost like gold. It's not really, and it's kind of rare and it's kind of nice and there's a limited supply of it. So let me take a flyer on that. Doesn't take many people to do that for it to push silver higher. But the idea that silver has just been permanently undervalued for 40 years relative to gold because the natural ratio, the historic ratio, is complete nonsense. All right. Sorry about that. William Berker, a very clear chart, much appreciated. All right. Pablo Pena is here. DB Stupid. That's a great name. Okay, Canna King dispensaries. Why would anyone buy American Gold Eagles 91% gold when you can buy a 99.9 from Canada and Australia? No, that's not okay. That's not the reason that American Gold, because you can buy American Gold Buffaloes, which are 999 fine too. That's almost amateurish to say that. And I'm not picking on you, but the point is, when you buy gold, people think that, oh, I want to have the purest gold. No, when you buy a gold eagle or a Krugerrand, they're 22 karat gold. You say, I don't want that. I want the real stuff. I want the 24 karat. Well, what you really want is 1 ounce of pure gold. And the reason that they made the coins 90% gold, the pre-33, and add a little copper to them was to make them more durable. I've heard dealers say they prefer the American Gold Eagle because they don't get damaged as much as the 999 Canadian Maple Leafs or the 999 Gold Buffaloes. The point is, when you buy a 1 ounce gold coin, whether it's got 3 nines, 4 nines, 5 nines, or it's just 91.67%, you're still getting an ounce of pure gold. You're just also getting a little extra copper and some silver when you buy an American Gold Eagle. So that's not a reason why the price is down. It's not because people would rather have a pure... There are people that would rather have the pure gold. But the point is, you're still getting an ounce of pure 100% gold, or 99.95 gold, when you buy an American Gold Eagle. That's not the reason that they're not selling them. All right. Yeah, Bears Barry says, still 1 ounce of pure gold. I see his extra copper and silver you get for free. I'm sorry, I didn't see your comment. That's absolutely right. Yes, an American Eagle. Yeah, this is an important point to go through. I mean, it's not self-evident. You just think that, why would I buy something that isn't pure gold? I mean, am I a schmuck on wheels? I mean, what else? They taking me for a ride over here if they're not giving me the pure gold. I can't see what is that. Oh well, yeah, it's a little more weight to a American Gold Eagle 1 ounce coin, because you're buying 1 ounce of gold. Oh, here it is. You're buying 1 ounce of gold. You're not buying the size of the coin. So let me tell you exactly. Also, like when you buy a, I think the Silver Eagle is the same thing, because it's not quite pure either. It's got a little copper. The Silver Eagle is not as pure as other silver coins. It also has just a touch of copper in the Silver Eagle coin too. That I don't know why. I guess they figure they might transact with those, because they are legal tender, and so is the gold Eagle. So basically, the ounce coin, the 1 ounce gold coin. There it is right here. It is 33.931 grams. And I believe that's just slightly more than an ounce. And it is, 91.67% gold, 0.03 silver, and 0.0533 copper. But net weight is 1 ounce of pure gold. So there is just a little extra silver and copper in there. My silver maple says $5. That is money. That's right. Royal Canadian Mint, $5 for I used to think that was a good thing, because the American Silver Eagle is 1 ounce and it's only $1. And so if there ever was an issue with confiscation and they wanted to kind of screw you, they'd say, hey, we'll give you $1 for it. At least with the Canadian, they'd have to give you at least 5 Canadian dollars. Oh, okay, so where's Barry? He's just running through the thing here. Yep, he's right. Mate is late. All right. Yeah, and you're right, Kicks. There's a lot of people pointing out for kind of King here. Yeah, there's tax benefits for buying U.S. minted metals, and yeah, all right. Is that it? I think that's it. We're done tonight. All right. Well, I do want to thank everyone for joining me, and remember, Saturday night we do just silver. We do Saturday night silver with Smaulgld. Sunday, we do solid gold Sunday with Smaulgld. So we pretty much stick to the topic. Monday, I try to do a crypto show. I missed it the last couple of weeks. And then during the week, we cover the economic news. And we could cover gold and silver. I mean, it is about gold and silver and cryptocurrencies. But during the week, we cover them as they arise, the stories opportunistically, and we do cover a lot of economic topics during the week, but we kind of take a break, and there's less news on the weekend, and we talk, if you're new to this channel, silver and gold only on the weekends. So check out the channel. Make sure you subscribe to Smaulgld, BitChute, Smaulgld.com, YouTube channel, and of course, consider becoming a patron, subscribe star member, or making any other type of donation or support for the channel. Thank you very much. Let's see, you got any more comments or questions? Yeah, Nomadic Giant is here. I saw your picture today. You're in Thailand there. Yes, indeed. Enjoy yourself. All right.